Okay, so in our previous video, we are looking at 2024 paper in which we prepared the cash flow statements, which was question 2. Today, we are going to go another step ahead. I think we are going to finish this paper. Yeah, so we're going to question 3, in which we've been given 2 income statements as well as 2 statement of financial position, and we've been asked to calculate the following ratios below. Okay, so with the ratios, as you can see on question A, we've been given the profitability ratios there. Question B, you've been given liquidity ratios, and question 3, we've been given efficiency ratios. Okay, then question D, we've been given gearing ratios. So what we are going to do, this question is asking us to prepare to calculate ratios for each year. We've been given 2 years, 2 statement of financial position as well as 2 statement of income statement for two years. But what we're going to do is I'm going to prepare one, since all of the things is requiring us to do the same things. We're going to do one of them. Yes, so in our case we're going to do company ABC. Company ABC. Yes, we're going to do company ABC. So uh the first question is asking us to calculate the gross profit margin. So for gross profit margin, so with ratios, it's all about mastering the formulas. So for gross profit margin is our gross profit, because everything is given. Gross profit gross profit over sales revenue times 100%. Okay, so the sales figure that we use in here is the net sales. That is after subtraction of returns inwards if it's there. So in this case, where you've been given 2 tables that have already been drawn for you, it's easy because the figure is taken direct. So if you've been asked to prepare the income statement yourself as well as the balance sheet yourself, the sales which you use when calculating gross profit margin is the net sales after the subtraction of returns inwards. So according to the question, our gross, I said we're going to do a ABC. Let me increase the light. Yeah, the light is already full. Okay, so our gross profit, according to this question, gross profit is 11,640. So we have 11,640, and our revenue sales is 32,475. 32,475. So we're going to multiply by 100. Okay. So we have 11,640 divided by 32,475. That's that times 100. That is 35.8. Okay, so this is 35.8%. Okay, that is for question A, number 1. Question A, number 1, that is it. Number 2, we're asked to calculate operating profit margin. Number 2, we're asked to calculate we're asked to calculate the gross profit markup. Okay, so a markup doesn't have a formula. A markup is only a way on how we're supposed to convert a margin into a markup. In some questions, you can be given a markup and you have to convert it into a margin. Okay, so in this case, since we already have the margin, it's the margin that we're going to use to convert this information into a markup. So on the conversion of margin to markup, in this case, since we've been given a margin, we already have a margin in question A and we want to convert into a markup, we're going to get the same number. In this case, the number is 35.8. We're going to divide by 100 minus the same number, which is 35.8. Okay, then the figure we're going to get to multiply by 100. Okay, so since we're converting from margin to markup, we're going to get the number that the margin which we have divided by 100 minus that margin again, then the figure will get multiplied by 100. If we are converting a markup into a margin, we're going to get the same number, which is the markup which has already been given, divided by 100 plus. The only difference is a plus there. Markup to margin, you add. Margin to markup, you subtract. Yes. So in this case, we have a 35.8 divide by, okay, let me start with the first down part. 100 minus 35.8, this is 64.2. Okay, so we have a 35.8 divided by 64.2. This is that times 100. This is a 55.8. So our gross profit markup is 55.8. So we can use this one as well. If in some cases we can be given the markup and be asked to calculate the margin. So we're going to get, if we are to convert this back into a margin. So we're going to get the 55.8 that we have. We're going to, I said we're going to add now. So we have a 55.8 plus 100 plus 100, then times 100%. So the 55.8 divided by 100, plus 100 is 155.8. So we have a 55.8 divided by 155.8. This is that times 100%. That is the 35.8, which is on the margin. Okay, so from that's all about the conversion of markup and margin. There's no formula for markup, but we just are going to use the margin which we've already calculated and change it back to markup. Okay, so next question, we're asked to calculate operating margin. So for the operating margin, which is a numero 3, operating profit margin. Okay, so for operating profit margin, this is our profit before interest and tax divided by sales or revenue times 100%. So our profit before interest and tax is direct figure in the question. So profit before interest and tax, profit before interest and tax is 3465. So we have 3465, and our sales, the sales have not changed, which is 32475, then times 100%. Okay, so we have a 3465 divided by 32475. That's that times 100%. This is so this is 10.7%. Okay, that was number 3. Number 4, the question is asking us to calculate net assets turnover. Number 4 is asking us to calculate net assets turnover. So for net assets turnover, it is our sales as well divided by total assets. Okay, times 100%. So our sales have not changed. Our sales still remain 32,475 since we are using ABC. Then our total assets, we have 15,405, as you can see, 15,405. So 15,405 times 100%. So we have a 32,475 divided by 15,405. That's that. Then the figure we have going to multiply by 100. Okay, so we're not going to multiply by 100 here. This is going to be a 32,475 divided by 15,405. This is going to be 2.1. Okay, this one is not multiplied by 100. Okay, so that's all for. Okay, we are still remaining with return on capital employed. Okay, so I'm going to use the other page. Okay, then for retains, what we call ROS, this is a profit before interest and tax divided by capital employed times 100%. Okay, so for retains on capital employed is equals to profit before interest and tax divided by capital employed times 100%. So our profit before interest and tax in this question for ABC, profit before interest and tax is 3465. 3465 divided by capital employed. For capital employed, we know that we're going to get our total assets minus the current liabilities. So our total assets for ABC was 15. Total assets are here 15405 minus current liabilities, sorry. So for current liabilities total current liability of 2880, so minus 2880, that is our capital employed, which is a 12,525. Then we are going to multiply by 100 according to the formula. So we have 3465 divided by 12,525, that times 100. This is a 27.7%. That is for ROS retains on capital employed. Next in the question, we have our liquidity ratios. So for liquidity ratios, the first one is current ratio. So we're going to B. So B number 1, we're starting with our current ratios. So with current ratios, you know that it is always current assets divided by current liabilities. Is equals to 1. Okay. So yeah, our current assets in this question, our current assets were equal to okay, we don't have the total for current assets. We're going to add here. So we know that there's inventory, which is 12,075 plus 3495 plus the 45, which is bank. This is 4815. So current asset is 4815 divided by current liabilities. Total current liabilities have already been given the total to be 2880 is to 1. Okay, so we have that divided by the 2880, sorry, 4815 divided by 2880. This is 1.7 is to 1. Okay, last time I explained what's the meaning of this is to 1, which simply means for every 1 quarter that we are owing, there is 1.7 to pay, which this is just indicating that liabilities are going in here once. That's why we have a 1 there. Okay, so that was our current ratio. Then number 2, the question is asking us to calculate the acid test ratio. So for acid test, it is our current assets, of course, minus our stock divided by current liabilities. The only difference we have is we're subtracting stock here. Okay, so current assets were 4815 minus stock. So our stock was 1275. So we are removing the 1275 minus 1275 divided by current liabilities have not changed. Okay, so we had the 4815 minus 1275. We have that divided by 2880. This is 1.2 is to 1. Okay, 1.2 is to 1. Then next we are calculating, next we are on C. Number 1, the question is asking us to calculate inventory days. So inventory days, our inventory days is our average inventory divided by cost of sales multiplied by number of days. Okay, so our average stock is our opening plus closing divided by 2. That is if we are preparing our own income statement and our own statement of financial position. But where they are given in our case, we are not going to see any closing inventory, which means the only inventory which we are going to see in the question is our inventory figure that we need. Okay, so in this case our inventory is 1275. So we have 1275 in our cost of sales. Our cost of sales is 2835. 2835 times the total number of days, 365 days. So we have a 1275 divided by 2835 times 365 days, which is giving us a 22.3 days. That is number 1. Number 2, the question is asking us to calculate receivable days. Receivable days. So for receivable days, these are receivables, or what we call debtors, divided by credit sales. The formula indicates credit sales times total number of days, 365. So our receivables in the question, our debtors in the question were 3495. So we have a 3495. And our revenue is 32475. 32475 times total number of days, 365. So on top we have a 3495 divided by 32475. We have that times 365. So this is 39.3 days. Okay, then next in the question number 3, the question is asking us to calculate for payable days. So for payable days as well is our creditors, what we call trade payables, over cost of sales times total number of days. Okay, so in our question, our creditors were worthy 405. So this is 405, and our cost of sales, we use them here, which means they've not changed. 208.35 times 365. So this is going to be, we have a 405 divided by 208.35 times 365. So this is 7.1 days. Okay, next in the question, we're asked to calculate, okay, we're already on D, in which we are supposed to calculate the gearing ratios. So for gearing ratios, the first question is asking us to calculate the debt equity ratio. Debt equity. Okay, so our debt equity ratio, it is our profit after interest and tax over ordinary share. So our profit after interest and tax, in this case, profit after interest and tax is 615, and our ordinary share in the question, ordinary share is 4050. So we have a 4050. This is giving us, so we have a 615 divided by 4050. So this is 0.2. Okay, we can still write it as 0.2. Okay, next the question is asking us to prepare one more ratio, which is the interest cover. Next is our interest cover. Under interest cover, this is profit before interest and tax over interest. So our profit before interest and tax in the question was profit before interest and tax was 3465, and our interest, which is finance cost, which is 375. So we're going to divide by 375. This is going to be, okay, so this is going to be in 9.24. So just like I said, I was supposed to do for all the two companies here, where I'm doing for ABC here and the other company is XYZ on the other side. But then due to time, and also since we are doing the same things, I've decided to do one company. Then we're going to use the same ideas and the same concept to do the other company. Yes. So that's all for question 3. That's all for question 3. Next, we have we've been asked to prepare is a cash book, as well as the bank reconciliation. From there we have C, which is what's this? This is a partnership account, in which we are required to prepare the partner's current account. Okay, so what we are going to do is so with this one, I think we did this question in the other paper, I mean the bank reconciliation. No, okay, we did this question. I don't know if I should do it again. I just have to be fast, or you're going to go back to the other video and watch it again. Okay, maybe for the sake of understanding, maybe I should do it again. So, okay, in this case, we've been given the balances for the incomes, for the balances for the cash book, as well as the balances for the bank statement. These balances were not in agreement, which means something was wrong. That's why they failed to agree. So now the question is asking us to reconcile the balances so that we arrive at the same balances, and the bank statement is always assumed to be correct, while the mistakes are made by the accountant when writing the entering the information in the cash book, where someone is supposed to write a 10, they end up writing 100. Someone is supposed to write a 99, they end up writing a 990s. Those sort of mistakes. Okay, so in our case, they're saying on 30th June 2021, Cook's cash book showed that he had an overdraft of 300. Already an overdraft, which means it's a credit balance. Means you have drawn money more than what you have in the bank. So they're saying there's an overdraft of 300. So we're going to start with our updated cash book. But this is question 4. So we're going to update the cash book. So we're going to start with a balance already, which is balance brought down in this case. So they're saying Cooks had a credit balance, had a balance of 300. And on overdraft means he had drawn more money than he has. So we're going to have a credit balance of 300 as our balance brought down. And then the question is saying, on his current account at the bank, and the bank statement as at the end of 30 June showed that Cook was on credit with the bank by 65. So according to the bank statement, they're saying Cooks is with a balance of 65. Means Cooks is having a balance of 65, which is a credit balance on the bank statement. So we're going to come back to that part when we start doing the bank reconciliation. So let's follow the following adjustment which happened during the year. So they're saying checks drawn amounting to 500 had been entered in the cash book but had not been presented. So that is already unpresented checks which are not part of the cash book. B, checks received amounting to 400 been entered in the cash book but not been credited by the bank. Those are already uncredited, which are not part of the cash book. C, on instruction from Cook, the bank had transferred interest received on his deposit account amounting to 60 to his current account. So they're saying the bank had transferred interest received. Remember, interest received is, again, money is coming. Maybe this person had to put money in a fixed account and then had to receive interest for keeping that money maybe for a lot of time. Yes, so for a long time the person is receiving an interest. So they're saying this money was put in his, transferred his money on his deposit account instead of his current account. So since this money was supposed to come to him, and remember on the cash book, this is our receipt side. This is our receipt side, and this is our payment side. Okay, so they're saying since this is interest received, this again interest received is coming to the business, so this one was supposed to be debited here. This money was supposed to be indicated on the receipt side, it's in the current account, but what they did, they put it on the deposit account, which means they had written it on the payment side. So to correct this error, if you write a 60 here, it's going to cancel that 60 if we had to balance this with having, if it had only this transaction. If we are to balance this, we are going to find that everything is going to balance. We're not going to have any balance anywhere, which is going to affect everything. So in order to correct this type of error, we are going to double the amount and put it on the side where it's supposed to be long. So since it was supposed to be 60, we're going to double it, and this is going to be a 120. Okay, next they're saying bank charges of 35 shown in the bank statement have not been entered in the cash book. Bank charges, they have not been entered, and bank charges are always on the credit side. Bank charges 35. Next, the payment side of the cash book had been undercast by 10. So they're saying the payment side had been an undercast. On the payment side, there's a shortage of 10. So we are going to write that as an undercast 10. Next, dividends received amounting to 200 been entered, had been paid directly to the bank and not entered in the cash book. Dividends received are coming to the business, so dividends received are always on the debit. So dividends received, since they were not entered, amounting to 200. Next, a check for 50 drawn on deposit account had been shown in the cash book as drawn on current account. So this check was drawn on deposit account, not on the current account. So it was a payment for through check. Now they had indicated as if it was drawn from the current account. So to correct this error, we are going to remove it. We are going to bring it back on the debit side. Remember, it was supposed to be moved from a different account, but they have removed it on the debit account. So we're going to put it on the debit side. So this is interest. Oh, sorry, it's just a check. So I'm going to write it as a check. So this is a 50. You're just removing it because they are not supposed to remove it from here. By removing it, they entered it on this side. So we are bringing it back. That's why we're putting it on the debit side. Remember, this is payment, money that is going outside. Okay. Next, a check 25 issued to Jones was replaced on out of date. It was entered again in the cash book. No other entry being made. Both checks were included in the total of unpresented checks. So we're going to remove this in the presented checks. We'll come back to that later. But then they're saying this check was issued to Jones when it was replaced on out of date. It was entered again in the cash book. So they entered it again. Check was issued to Jones, but what they did was it was replaced on out of date. Now where they entered it again in the cash book. So it was supposed to be entered once, so they entered it again. So we're going to remove it from the cash book by debiting it. Check, this one is issued to Jones. Okay, so we're done with the updated cash book. We're going to balance this up. Have a 120 plus 200 plus a 50 plus a 25. This is 395. I just hope this is the biggest side. Okay, 395 minus 35 minus 10 minus 300. Okay, yeah, we still have a balance carried down on this side. 15. Okay, so that's all for updated cash book, which is question A. Then for question B, we're asked to prepare the bank reconciliation statement. So with the bank reconciliation statement, okay, so we're going to start. So with the bank reconciliation statement, we're going to start with the balance as per bank statement. So the balance as per bank statement in the question was 65. So we're going to start with the 65, and we are going to add our uncredited checks. If we start with the balance as presented checks, if we started with the balance as per updated cash book, we're supposed to add our unpresented checks. But since we started with the balance as per bank statement, we're going to add our uncredited checks. So our uncredited checks in the first place were checks received amounting to 400 had been entered in the cash book but not been presented, but not been credited. That is uncredited checks. So they were 400. Now let's not forget adjustment C, which is saying on instruction from Cook, the bank had transferred interest received on his deposit account amounting to 600. So this interest was not received in John's account. That's what we did by entering it in the cash book. So remember, when you receive money, the bank was supposed to credit that money into your account, but this interest was not credited into John's account. So it is also part of uncredited checks. It was also not credited in John's account. So that's why we're adding it. So we're going to add the 60. This is going to give us a 460. So a 460 plus 65, which is on top. This is a 525. 525. Then we're going to less now and presented checks. Okay, so our unpresented checks were 500, but let's not forget that there's a check which was issued twice. That which was issued to Jones. They're saying both checks were included in the total of unpresented checks, so we're going to remove them. So we're going to remove the 25. So this is going to be 500 minus 25. This is 475. Okay, so minus 475. So the balance as per updated cash book is 50, which is the same balance which we had found there, which simply means everything that we have done here is correct. Next in the question on C, the question is asking us to prepare current accounts, and in order for us to prepare current accounts, we need profit and loss appropriation account. Okay, I think let me do it in the next video.